DraftKings reported quarterly financial results on August 6, 2025, and investors are asking me if DraftKings stock is still a buy after digesting these latest quarterly results. I'll answer that question in this video. Remember, I've had DraftKings stock rated as one of the best stocks to buy this year, one of the best 8 stocks to buy. In August, I updated that recommendation earlier in the month, and the stock is up over 16% year to date in 2025, outperforming the S&P 500 index and outperforming the Nasdaq index as well. So I'm happy about the performance of DraftKings stock so far in 2025. And I'll give you a little preview of what I thought about the company's earnings results before I get into the details. And it is that I thought the earnings were really, really good. So let me share with you the details from these results and share with you my updated proprietary discounted cash flow valuation, which calculates a fair value for the stock, and I'll update you on my rating on DraftKings stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so DraftKings saying that for the 3 months that ended June 30th, it reported revenue of $1.5 billion, which is an increase of 37% compared to the same quarter last year. 37% revenue growth is a really strong number for any company, especially amid macroeconomic headwinds in the previous quarter and in the first 6 months of 2025 that have slowed macroeconomic output in the United States and worldwide. DraftKings operates in the United States and Canada, two economies that have slowed down considerably here in 2025 as a result of the tariffs that have been implemented by President Donald Trump, which is causing businesses to slow down hiring, slow down expansion, and wait and see how the outcome impacts their businesses before making any large decisions. DraftKings saying they set records for revenue, net income, and adjusted EBITDA in the second quarter, driven by an acceleration in revenue to 37%. We're pleased with the results and we're maintaining our 2025 guidance, but we are saying that the revenue looks like it's going to come in towards the higher end of what we thought to begin the year, highlighting the strength of our platform as we prepare for an exciting new state launch. And I'll talk about that in a little bit. DraftKings is not authorized to offer its services in every state in the United States. It only reaches roughly half of the population in its popular sportsbook, and it's only in 5 states for its iGaming product, which signals an opportunity for continued expansion for this company. The company reported monthly unique players increased to 3.3 million, average unique paying customers in the second quarter, which was an increase of 6% compared to the same quarter last year. They did make an acquisition of Jackpocket, but even excluding that acquisition, monthly unique players would have increased by 5%. So the acquisition was relatively small compared to the size of DraftKings. The NUP growth is not that great, but what was impressive was the average revenue per user, which increased to $151 in Q2 of 2025, representing a 29% increase. Previously, DraftKings had updated investors on the longer customers stay with DraftKings, the more they spend. The average revenue per user increases as time on the platform increases. And there are many states where DraftKings only recently entered. So all of these customers, as they progress, as they learn about the games and the different offerings the company offers, they will generate more revenue, especially in the sportsbook, right? Sports betting is interesting. If some of you, I guess if you're interested in DraftKings stock, you're probably aware of how sports wagering works. But just in case you're not, there are many ways you can bet on sports now. You can just make a straight bet where you say, I think the Lakers are going to win tonight, or I think the Dodgers are going to win tonight. You can use the spread where you say that you can wager that the Dodgers are going to win by at least 2 runs. You can also make wagers that are combinations, or what is called a parlay in sports betting terms. where you wager that the Dodgers will win by 2 runs. The Angels will lose by 2 runs. Well, the Angels were playing the Dodgers yesterday, but if they were playing separate teams. And so if all of your wagers are correct in a multi-tiered wager, you earn a greater payout than if you just made a straight bet, right? So you can imagine the complexities of, and I just gave that example so you can kind of understand that as a player spends more time on the platform, they start to experiment with those more complicated wagers, which of course has more favorable outcomes for DraftKings because the odds are more in DraftKings' favor if you use a multi-step wager. And so as customers, get comfortable and start to utilize more of the complex wagering elements, the average revenue per user increases. And that's what DraftKings is reporting is actually happening. And I'm not surprised to see that. I expected this to happen. It's one of the reasons why I've had DraftKings rated as one of the best stocks to buy. And if you didn't know, I had a little bit of a gaming background prior to becoming a professional investor and a professor. I was a professional poker player for roughly a decade. And so I'm aware of this market and how customers in this market appreciate the different product offerings that a company like DraftKings provides. So DraftKings, its full year guidance equates to 32% year over year growth, and they're maintaining their adjusted EBITDA guidance of 850 million at the midpoint. And this includes the anticipated impacts from higher tax rates in New Jersey, Louisiana, and Illinois. So the better than expected revenue performance is positive on the company's adjusted profitability, and the increase in tax rates is negative. So it looks like they're offsetting, and the full year adjusted EBITDA will come in as they said it would come in for the year, but with a different mix of factors that are implementing those results. So as I mentioned, DraftKings is only live in 25 states and Washington, D.C., which represents just half of the U.S. population. Now, I don't expect DraftKings to be available in every state. I don't expect DraftKings ever to gain approval, for instance, to operate in Utah. I also don't expect DraftKings to get approval to operate here in California. And for different reasons, right? Utah has an extremely conservative population, which I don't think will be in favor of allowing DraftKings to operate in the state. And in California for a different reason, because there's already so many embedded gaming interests with local card rooms, tribal casinos, horse racing establishments, all of which banded together to keep DraftKings and other mobile gaming operators out of the state. They did that. They did a similar thing when online poker operators tried to enter into California. Those embedded interests banded together to fight off those online poker operators from entering the state. So they do work to keep these companies out, and I don't expect DraftKings will gain approval in California, at least not anytime soon. So I know many of you are expecting that. I would place the odds at slim for DraftKings to gain approval in California, but I do expect them to expand into more states than they are now. And especially with iGaming, they're only live in iGaming in 5 states in the US, only 11% of the population. I expect that to increase, but not anywhere near the sports betting level. And again, for the same reasons as in California, there are many states that have tribal casinos in their jurisdictions. And so those tribal casinos and those embedded gaming interests will work to keep DraftKings out. But there aren't very many states where sports betting is prevalent, and that's more in the black market. It's happening underground where there are bookies taking wagers and all of that. So states are more inclined to allow sports betting and less inclined to allow iGaming, and I expect that to continue. And they're also in Canada representing 40% of the population. So now let's look at valuation. I calculated an intrinsic value per share, which I updated today. Previous to evaluating the earnings results, my intrinsic value per share for DraftKings was around $58. I upgraded that. I updated a few figures, and now it's $60.20. The current market price is $43. So the stock still looks undervalued after earnings. And then when I look at valuation on a forward price to earnings basis, it's trading at a forward PE of 54, which is near the lower end of where this stock has traded for according to this valuation metric all year. So after evaluating the company's results, I updated my rating on DraftKings stock and reiterated my top 7 rating for DraftKings on August 12th. So I do think it's still one of the best stocks to buy now, one of the best 7 stocks to buy now. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.